What's up everyone, it's Jack, and in this video we're going to talk about whether or not it's a good opportunity to buy the dip on Target. We're also going to take a look into the technicals, some price targets, the PE ratio that it's currently trading at compared to where it usually trades, and then the good and the bad of the company. So let's jump right into it. First things first, I want to talk about some of the reasons why you're seeing a lot of selling pressure in this stock and why it is down so low right now. And one of the reasons for this is in their last earnings report, they gave soft guidance for Q1, which is, the earnings that we're actually about to see tomorrow morning. And anytime a company comes out and, cuts their guidance, stocks tend to see a decrease. And that's because the markets are typically forward thinking. So if a company comes out and says, hey, we feel that Q1's not going to be as good as we originally expected. Well, guess what? That's going to get priced in. Another reason is because they've been seeing less foot traffic, I think for like 10 weeks in a row now. And this can be concerning as well. But you have to remember, consumer confidence is down right now. And, it's because of the fears of the tariffs and the uncertainties of whether or not we're going to go into a recession. So in a sense, there's good reason for that, but nonetheless, this is concerning and something that we want to keep our eyes on for sure. And as I just mentioned, the news surrounding all the tariffs obviously is not making this situation any better. And that's because really any of these consumer-based companies, retailers, they're seeing the biggest hit in their stock price because they get a lot of things imported from, China or other countries. And so, that's another reason why you're seeing really any stock within this industry not do so well right now. And I think it's a matter of time before obviously this blows over, but nonetheless, it is affecting the stock prices. Here's another reason that the stock price is declining more than some of their competitors, and that's because they make the majority of their money off of home goods and apparel, and these are typically the first things that consumers are going to stop spending money on in the event that there is a recession. And in general right now with, the fears of the tariffs and fears of a recession, consumer confidence is just down. And so, if you're not confident in where the economy is going, then what do? You stop spending money, right? And one of the first things you're going to stop spending money on probably is home good products because, you don't need that new fireplace or that, new couch or end table, whatever it might be, right? It's not necessary to have. Same thing with clothes for the most part, right? You don't really need to go out and buy a new outfit every week, right? I'm sure you have plenty of clothes in your closet to get you by for the next year or two, right? So this is another reason why Target specifically is seeing a big hit because that is where they see the majority of their profits, and that is where the majority of their profits are going to take a hit in the event of a recession. Not to mention, stores like Costco and Walmart, they have a big grocery department. So these are things that people are always going to buy, whether there's a recession or not, because you have to eat, right? And they make a good portion of their profits from there, and that makes them a little more recession-proof, I guess, per se. But with that being said, I'm sure, you've gone into Targets before that have grocery stores in there. And I believe this is something that they've been implementing over time, to keep up with the competition. But nonetheless, most of the Targets that I've gone in, they all have groceries in there, and pretty much like a full grocery store for the most part. So I do think that, they're bridging that gap compared to what some of the competitors have, like a Walmart, right? To try to compete and take market shares from them. So that's something to keep in mind, and I think it's just a matter of time before they implement that into every one of their stores. So those are some of the main reasons why we're seeing a decline in the stock price. So with that being said, let's go ahead and hop into the charts so we can take a look at the stock and kind of see what we're looking at on a technical basis. And then I'm going to get into some of the good about the company because it's not all bad. So let's take a look at Target. I have currently the weekly time frame pulled up. So this is a big picture of where the stock is trading. And you can see we were at highs of 242 at one point. From all-time highs, the stock is down 60%. Pretty crazy, honestly. But, where people are fearful, a lot of times you will find some good opportunities. And, you look over here, we are trading at levels that we were trading at in 2019, okay? And this is back when we had the COVID fear and all that as well. So, the company is pretty much trading at a price that you could have bought it for 5 years ago. In my opinion, I don't know what you think. Seems like a good buying opportunity to me, but obviously you have to be skeptical of some of the things that are going wrong with the company. Nonetheless, when I'm looking at the technicals, we are reaching a pretty key level of support right here. Again, the stock traded around this level, right, for almost a year, okay? Obviously a little bit higher, a little bit lower, but it traded within this range, okay, for about a year. And, that means there's a lot of support right here. Not to mention, when we're zoomed out, we are getting oversold on the RSI on the weekly and the monthly, getting right down here to where, we have recently seen bounces when we get this low. So one of my favorite patterns to trade is a reversal. And, when it gets down to here, this is what I like to call confirmation. All right. So you get the sell off, you get the consolidation. And then once we break above the moving averages and hold, then we have confirmation. Okay. So on a technical standpoint, I think this is looking pretty good. Now, that's not to say this thing can't rip up and then fall right back down, but depending on how you like to trade, if you're a swing trader, this could be a good opportunity. Obviously, you might want to set your stop loss down here somewhere, but if you're a long-term shareholder, that's what I want to get into next. So now let's talk about some of the good, okay? So obviously there's a lot of negativity surrounding Target right now, and that's why you're seeing the stock decline so much, all right? So typically, like Warren Buffett says, buy when others are fearful and sell when others are greedy. I think this is a time where a lot of people are fearful of the stock, and there's some good reasons, but in the long term, I'm pretty confident that Target's going to make a recovery. Even if it doesn't make a full recovery, there's still a lot of upside in this stock. Not to mention, their balance sheet is immaculate. I mean, their balance sheet looks great. They have plenty of cash on hand, so there's no chance that they're going out of business anytime soon. They are making investments as well when it comes to AI and whatnot to try to get ahead of the curve. And these are things that aren't necessarily going to pay off right away, so it might take some time. But with that being said, Target has a great dividend that yields over 4.5% right now where the stock's trading, of course, and they've raised their dividend for 50 plus years straight. Like, let that soak in. That means they've raised their dividend through the financial crisis, through the dot-com bubble, through the COVID pandemic, you name it, they've still raised their dividends. That is super impressive, and that also gives at least me a lot of confidence in the company, and I feel the company has a lot of confidence in themselves to be able to keep doing that. I mean, that's pretty impressive if you ask me. I mean, think about it. Most of these high-yield savings accounts, so if you just throw your money in a high-yield savings account, you're going to get around like, 4.5% probably, right? On the higher side. So you're telling me that I can put my money into a stock like Target, still get my 4.5%, and have the upside, of the stock appreciating? In my opinion, I think this is a great buying opportunity, and that is one of the main reasons why. Because let's say you get into the stock and it continues to go down, well, continue to average down on your share price and collect that dividend. I mean, you're still making a decent return while you hold these shares. So to me, it's a no-brainer. Now, obviously, this is not financial advice. And if you believe, for whatever reason, that this company is failing and they're just going to get worse and worse and worse, then obviously maybe this is not the company to invest for you. That being said, you can always put stop losses to minimize your risk. Another thing I want to point out real quick is that we're currently trading at 11 price to earnings ratio, okay? And historically, over the past 10 years, Target has traded around a 16 multiple, a 16, almost 17 multiple, okay? So it is well undervalued compared to what it's been trading at for the past 10 years. And with that being said, the industry average, pushes 25 to 30 to even higher. So all in all, I mean, this company is definitely overvalued. It's oversold. It's got a great dividend, right? And it's getting to a level, in my opinion, of support where it's almost too cheap to ignore. The next thing I want to do is jump into some of the analyst price targets. And now you got to take this with a grain of salt. Do not trade based off these price targets by any means. I've seen plenty of companies that, based off the price targets, they look like they're, going to drop 10, 20, 30, 40%. maybe like a Palantir, and it just keeps going, right? Vice versa. I've seen it the other side too, where the price targets are super high and the stock still declines. But nonetheless, you have 37 analysts covering the stock. It's pretty impressive. That's a good bit of analysts. Most of them do have a hold rating, which is understandable because the stock has been seeing a lot of, uncertainty and a lot of, pressure with the news and lawsuits and boycotts and, obviously the tariffs and consumer confidence is low. I mean, there's just a lot of reasons why people are going to have a hold on this company. But nonetheless, the low on the street is $82, okay? And the average is around 117. So it gives you a pretty good upside. So if we take a look at that, if this thing were to even go back to the average price target of 116, that'd be 20% on your money. Now, this is just based off of a 12-year estimate. So if I made 20% on my money in, 1 year, not too bad in my opinion. And obviously, if this thing decided to make, a full recovery, well, the potential is insane. 144% on your money. But let's just be modest, right? There was a lot of resistance right around this level here. You can see that, we could not break above it for the longest time and then got rejected and then came back up to it again and got rejected again. So this is a pretty, solid point of resistance. That still leaves you upside of 60% if it were to just recover to there. So in my opinion, yes, I think Target is a great opportunity to buy the dip. I never recommend just going all in on these stocks, obviously. Dollar cost average, buy a little bit now, buy a little bit later. But again, in my opinion, if you're just sitting on the sidelines, with cash and getting that, high yield on it, it's not a bad idea. But you put your money in a stock like this that's raised their dividends for 50 plus years in a row. I mean, that's insane, right? And with that being said, you're still getting 4.5% on your money just to hold these shares. So who cares if the stock goes down some more, right? I mean, as long as you don't think this company is going to completely go bankrupt, which it's nowhere near that based off its balance sheets right now, then you really have nothing to worry about. You can still make your 4.5% while you wait this thing out. I think that's the beauty about this particular stock. Not to mention, if this thing starts appreciating, you're getting a great dividend on it, and you're getting all the appreciation and upside as well. So that's my 2 cents. Let me know what you guys think in the comments, and I'll see you in the next one.